deja vu in the stock market, as this week is basically ending exactly like last week did. Investors are freaking out. The S&P is falling down through the 50-day moving average, and everybody's just hoping that, like the last two times, it bounces off the 50-day and we have a nice green weekend and open super green on Monday. And similar to last week, not only does it seem like most investors are expecting a bounce, but insiders remain fairly bullish even with some of this market turmoil. Though this past week, insiders were slightly less bullish than the previous 2 weeks, but that's mainly because the last couple of weeks, insiders made over 40% of their total unscheduled trades were buys, which is pretty high and way above the average of 33%. This week, for the first time in November, we fell down below 40%, but still sitting in the high 30s, which again, still fairly bullish. So maybe things in insider trading land are cooling off a little bit, but it seems like they're still positioned pretty bullishly through the end of the year at least. Taking a quick peek at some of the largest insider buys, we've got the CTO at Upstart buying $3.9 million of the stock for his first purchase ever. The CEO and the CFO at Freshworks are both buying $2 million of the stock, and a director at Galaxy Digital is even buying the dip with a $730,000 purchase. However, as you know, most insider trades are totally useless, and we are looking for those unscheduled and high signal insider trades that can help us outperform. And one of the most interesting trades today was the CTO and COO at FTAI Aviation both buying the stock. The CEO specifically is very interesting because he bought $312,000 of the stock, and on his previous purchases, the stock has gone up an average of 64% in the following year. Now, unlike most interesting insider trades, this actually looks to be more of a momentum play than a value play. Normally, insiders are buying the stock when it appears to be pretty cheap, but in this case, the stock doesn't look particularly cheap, and it's actually had a pretty good last few months. The stock is up 37% in the last 6 months, but it is down about 6% in the last month, which brought it down below both the 20-day and 50-day moving averages. The company is also trading at a relatively high EV/EBITDA multiple compared to its average over the last 5 years, and a relatively high EV/EBITDA multiple compared to its industry, but it is growing much faster, growing at about 30% year over year versus 1% EBITDA growth for the industry. In this case, I don't really like buying stocks that are falling and below their 20 and 50-day moving averages, so I'd like to see either come down and touch the 200-day and maybe take a stab there, or start to turn around and get above the 20 and 50-day before potentially taking a position in the company. However, very interesting insider trade. On the flip side, a company with very high signal insider sales is Heritage Insurance. Insiders have sold over 1% of the company in the last 3 months in unscheduled sales. It's the only stock in the last 3 months where insiders have sold over 1% of the company, and the company hasn't gone down. In fact, it's up like 35%. The CEO just sold another $442,000, which is his second largest sale ever. And the only time he did a bunch of selling before was back in 2015, and the stock fell over 40% in the following year. The company is also trading at a historically high price to book value, not quite to where it was at when it was 2.5x back in 2015, but at about 2.1x right now, which is way above its average of closer to 1x. In this case, the company's stock price has actually been super strong, but again, another very high signal insider trade that's worth keeping on the watch list.